Welcome back to the exchange. It's the summer of deal making, especially across the industrial sector. In the past week alone, we've seen big mergers from the likes of Baker Hughes and Chart Industries, Amphenol and CommScope, and most notably, and I covered this pretty extensively, Union Pacific and Norfolk Southern. So all these deals have my next guest wondering who's next within the industry. Well, let's bring in Julian Mitchell. He's U.S. Industrials Analyst at Barclays. Julian, it's great to have you on. And let's start right there. What is triggering this M&A, and where do you expect it to continue?
Yeah, sure. So I think there's a couple of things triggering it. I think first off, a lot of executives, I think, were pretty optimistic late last year with the change in administration pending that you would have easier deal making in 2025 and beyond. Then, of course, you had the tariff news early in the year that put a lot of deal making conversations on ice. And I think as you've seen boardrooms and executives become more comfortable with the tariff backdrop, with the understanding there's a bit more certainty today than call it 4 or 5 months ago, that has allowed the conditions then, I think, for deals to start to move ahead. So I think the environment overall on aggregate demand is fairly stable. Regulatory-wise, it's perhaps more conducive to deals. And the tariff headwind that had reared its head, most notably in March, April, perhaps receding today. So I think those are the main sort of confluence of factors driving this step up. In terms of where could deal making happen next, my own area of focus is the multi-industry group. And so I think there's kind of a bunch of different categories you could see it in. I think first off, the classic acquirers who have dry powder would be the likes of Roper in the software world, Parker Hannifin, Ingersoll Rand, Invent in the industrial world. You might also see companies look to step up their divestments as they aim to try and simplify their portfolios. There's clearly been this trend of deconglomerization, if you like, in the last 5 to 10 years. And so companies like Honeywell, JCI, Roper, perhaps all looking to step up divestments. And then lastly, there are some pure plays in our coverage, the midcap type scale, who might be looking or receiving incoming interest from potential strategic acquirers.
Okay.
So those are a handful of some of the names.
All right. So let's talk about some of those midcaps that could be acquisition targets.
Yeah, sure. So I think there's a handful of names that we talked about. We try to look at names with a sub $20 billion market cap, relatively pure play business focus, i.e. not conglomerates, reasonably high organic growth. And so some of those names included the likes of Allegion, Lennox, Hubbell, Invent, and Ralliant. So a range of different markets there. Hubbell and Invent in the electrical world, Lennox in HVAC, Allegion in security, and then Ralliant in test and measure.